And good afternoon, everybody. This is Michael Felagera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, June 28th, 2021. I'm starting on the 30-minute chart today because, again, we remain in the progress of tracking the final minute wave 5 up to, again, new all-time highs of what we did today. But we're tracking that 5-wave structure, and it's forming sub-minute waves, and some of them within that, such as wave 1 and wave 3, have subdivided into their own 5 waves. And so we're really tracking this down to the sub level. And where we are right now is that the market did actually this morning dip down and put an additional new low right there at 42.6450. And that was enough for us to put in a sub-minute wave 4. We did. And that launches us into sub-minute wave 5, which I think is again subdivided. Now, the S&P was held back a little bit today by the Dow, or the broader market, plus the Russell, having more sellers in there today, as I think as we continue to do this position squaring and position adjustments in anticipation of the end of the second quarter and likely, the third and the fourth quarter moving forward. So we did see a lot of shifting and rotation today into tech, out of some other sectors, obviously. So I think that can be reversed tomorrow, because the pattern has been, we see them do it in the NASDAQ one day, and then the next day they're doing the opposite, because they're doing it in let's say, the broader market plus the Russell, and not so much in the NASDAQ, where the NASDAQ will be selling tomorrow, possibly. We'll wait and see. Always let the market tell you. But if that's the case, I think that maybe what we've always only finished here is sub wave 1 of sub-minute wave 5. So only the first wave of a 5-wave rally. And today did reach again a new high, but at the bare minimum resistance for the sequence at 0.236 at 4,281. I think the high was 80.75, 81.75. Excuse me. So I think reaching that level just got us a little bit into a dip. The market is off to begin the Globex session, but not anything great. And so it could be just like a 1, a 2, and then we start to head up into 3. We pull back into 4, we head up into 5, and that's where I think we begin to hit 4,300. Now that zone has formed quite a staircase of resistance. Our next resistance is 4,292. Then we have 4,300 basically to 301. But actually it goes from 4,301 to 4,310 to 43, where's this one? 16, 22, and 29. So the zone, once it gets past 0.382, and it does get itself to 4,300, that zone is from 4,300 to 4,330. And that would be where I would expect this all to finish, with wave 5 equaling wave 3 at 4,338. So that's a big zone. 30 points. Can the NASDAQ do the one day? Absolutely. We've seen it before. We could see it again. And they're the market of choice, because it's going to be the broader base of the 500 stocks that are traded there, rally as they move into those stocks, then yes, a 30-point rally in the S&P. And it fits the type of wave that we're also counting to completion here, because we'd be looking for a blow off. We're looking for this massive, everybody's got to have, we're breaking out, we're there, blah, 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 whatever the reason is, that's the feel, that'll be the look. So that could happen. It happened in the NASDAQ today, and it could continue in the NASDAQ tomorrow. But it could definitely happen in the S&P if that becomes the market of focus, where most of those stocks that they need to move into are a component of the S&P 500, of the Dow, of the Russell. Broader based indexes would be the choice that I would have tomorrow, that they should put in solid rallies. Going to do 30 points? You betcha it can. From here, it would be closer to 55. I've seen that too. We all have. And recently. So tomorrow, I think that the rally continues. We may continue to have a little bit of a pullback, but I'm not looking for too deep. If this is a 2, I would think you're going to get down. And see, we're talking really low numbers, 42.72 to 42.70. I don't think it's going to come back. It should not come back below 42.64. That definitely shouldn't happen, because if it's a wave 2, wave 2 can't be correcting more than wave 1. So it could not. So I'm not looking for a real deep correction here before the market again turns and starts breaking towards 4,300. But if that's the case, what we have 1, 2, 3, 4, and 5. So I really do expect, if this is indeed the count, market's going to tell us, then I'm looking for this big zone to be penetrated by more than a little. I would expect it to push up into it. Go out in style, I say. And please continue to use your moving averages. I use it on a 1, a 2, and a 5. That's for my intraday trading. But also, when you start to break out in either direction, you can start referencing your 15, your 30, and your hourly chart. And if it's a big enough breakout in either direction, you roll over to your daily so that you can get a better grip on where these moving averages are. So you follow your moving averages, and then also put in your own Fibonacci so that you can get an idea on where limitations are to the move that you're tracking. I do that intraday within my trade room. And so everyone is welcome. And you can get information on that by either just emailing me personally or through the site. And I'm going to leave it right there. The next deck date will be Tuesday, June 29th.